And folks, did I mention income tax-free money? How do you beat that? Everybody listening to the show today is probably concerned about our federal deficit, thinking that income tax rates are going to have to go up substantially. So, what's the best tax rate to pay? Zero. Well, there are some ways you can do that, guys.
And welcome into the program. This is your game plan for retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial, investment, and retirement future. He is president and founder of McIntire Retirement Services. Chris McIntire here with us, providing that guidance, ladies and gentlemen. And as a resource for you personally, if you've got questions or concerns about your money, your investments, your retirement accounts, you are always welcome to be in touch with an experienced, qualified resource. He is Chris McIntire of McIntire Retirement Services. The number to call, 800-868-1194, 800-868-1194. Chris, September is Life Insurance Awareness Month, and in the spirit of that, we're going to talk about creating and leaving a legacy. Now, certainly life insurance is by no means the only way to create and leave that legacy, but it is an effective planning tool. And we're going to talk about the different types, the pros and cons, and the other alternatives that we have for creating a lasting and impactful positive legacy on today's program.
Yep, sounds good, Peter. And folks, just because we say life insurance, don't reach for the channel changer or anything like that. Life insurance can solve a lot of issues for a lot of people, equal out inheritances, and do it all income tax free.
And I love those words in combination, right?
Amen to that.
But your comment there, Chris, I think it is apropos because one of the themes is that Americans are vastly and grossly underinsured. Far too many of us do not have the life insurance that is appropriate in place. And that may be because of that very kind of attitude where, oh, it's life insurance, I don't really want to hear about it, when it can be one of the most important and valuable tools for protecting those that we care the most about.
Yeah, absolutely. And, it comes in many different shapes and sizes and types. I have multiple policies of my own, so we can, construct and build a life insurance policy around specific objectives. Somebody listening to the show today may say, well, I've already got group life at work. There's nothing wrong with group life whatsoever. It's very cheap. You don't have to worry about underwriting a lot of occasions there. But if you leave your job, then you leave your insurance behind. So we'll get into some of the ins and outs here as Peter and I walk through the show here today, and it's going to be worth your while.
Chris, that actually can be something that may prohibit growth or advancement in your career. In fact, if you've got that group coverage at work and then some kind of health event happens, even if you have some other opportunity, you may not want to leave the insurance that you have in place behind. And I know that may be a very rare case and example, but it's just an example of why it is important to have proper and appropriate life insurance in place, both personally and if that group insurance is available, a fantastic additional component of protection.
Yeah, without question, because it gives you the freedom. You've already got your own policies on yourself that you've gotten throughout various parts of your career. And like I give you an example. In 2013, I bought a life insurance policy for myself. Okay, so what are we talking? 11 years ago, basically 11 and a half, actually. And, and I put $10,000 a year into it. Back then, it was a place I wanted to put some extra dollars so I can borrow from my policy or against my policy income tax free. Okay. So I had a death benefit of $250,000. And since I was young and healthy, I said, let's add the long-term care rider to my policy, which allows me to access 2% of $250,000 of my death benefit in case I needed it for some sort of long-term care need. So assisted living, home care, in a nursing home. So 2% of $250,000 is $5,000 a month. So I got a tax-free death benefit and a long-term care piece in one place.
A lot of protection for a single financial piece and component. And we'll talk about those benefits, Chris, the tax-free nature of the income that you can withdraw, the living benefits that are available if that worst case scenario, a long-term care event were to happen. Then, of course, the tool for creating that legacy. All of those are factors and facets and qualities that can be accomplished as part of your comprehensive legacy planning. And Chris, quite frankly, a lot of the audience may be thinking to themselves, well, it's not my goal to leave behind any vast amount of wealth for my children or my beneficiaries, which is not a selfish notion at all, in my opinion. You've worked hard for your money, spend it, enjoy it as you see fit. Absolutely. But the reality is, if we've got a plan that provides for our lasting financial confidence, then the odds are more than likely that something will be left behind. And here's where we get into efficient and effective legacy planning, right? Some legacies can be positive and easy to facilitate. Others can be arduous and messy and costly. We want to leave an impactful and positive legacy behind that is easy to facilitate.
Sure. We deal with a lot of folks in different avenues of financial success. And so, let's say, somebody has had a reasonable amount of success and they might have $2 million in an IRA account. Okay. And, obviously taxation issues are going to be a problem there. And, it said, okay, well, do we start peeling off some money out of that large IRA account and start putting it into a life insurance policy for get some cash value accumulation to utilize as an income tax-free retirement income to leave behind the tax-free legacy? Because you can buy life insurance is about buying tax-free dollars with pennies. And it just depends on how many of those tax-free dollars do you want to buy. And, our buddy Tom Hegna that you've had on the show here, his famous saying is, how much life insurance would you want to have on the day you die? As much as possible, right? That's kind of the common answer there. And, there are people, listening in right now that said, I don't have any debts. I don't owe anybody any money. My kids can sell the house. They're going to keep that. We've got other assets. That certainly makes perfect sense, but what if you went into the nursing home? Are you going to sell the house to pay the nursing home bill? You're going to cash in an IRA account at $10,000 a month to pay the nursing home bill. We're talking about leverage and not, reinventing the wheel and selling everything and abandoning strategies. Sometimes we're adding another spoke to the wheel because that makes that wheel stronger.
And for a married couple, especially important for consideration, or for those, Chris, that do not want to put undue burden on their children or their loved ones, those that care for them, to have that plan in place, to have those protections in place. So again, we'll be talking much more about the specifics of that, the structure of that, the options for that, ladies and gentlemen. And if you've got questions or concerns, if you would like to design and structure and implement your plan, everyone should have a plan, not only for their lasting lifetime confidence, but for legacy as well, and protection for those loved ones. That's exactly what Chris McIntire has done for so many across Northwestern Ohio, but so many more need to jump on that, be proactive, and take it seriously. So if you would like to get a start in that conversation, or pick up and review where your plan currently has you, give a call, pick up the phone, and call McIntire Retirement Services, 800-868-1194, 800-868-1194, 800-868-1194. Backing up for a moment, Chris, from the conversation of life insurance to the conversation about legacy. I feel as though you talk about legacy and the natural inclination is to think of a collection of dollars and assets that will be left behind. But truly, legacy is so much more than that. It's values, it's memories, along with the properties, the investments, the assets. And some legacies, again, may be very positive. And then if we have not addressed these things, even if we do leave behind a great deal of assets, if we have not structured things and coordinated them properly, it can be messy, and there may be negative implications and memories that go along with that legacy.
Yeah, you're absolutely right. We're up here in the middle of farm country as well, Peter. And let's take an example of a farmer that has 200 acres of land, and he passes away and he wants I guess we'll just say he wants his son to run the farmland, but doesn't want to disinherit the daughter. Okay. Well, you would buy a life insurance policy to equal that out. That way the son doesn't have to worry about refinancing the farmland. You built that into the practice. And I suppose if you had a good lawyer and your corporation was set up the right way, that the corporation may actually be able to buy the life insurance and you deduct the premiums, from your taxes. So a number of different utilizations here on a very what we would call a very simple concept, insuring someone's life. And I mentioned my policy that I had. Well, Robin and I are currently, doing something with a piece of real estate. We needed some short-term cash. So I borrowed $90,000 from my life insurance policy. I didn't have to sell any stock or anything like that to create it. And I only needed it for a short-term horizon. But, I borrowed 90 grand income tax free. I don't have to report it any place. When we sell the property, I'll eventually put the money back into it, obviously. But another neat mechanism that life insurance can do for you.
Interesting that you mentioned farming, Chris, because I find it fascinating, kind of the origin of common sayings that we have, and the one that sparked in my memory is "he bought the farm." Right. And we all know that saying means that somebody has passed away. But the true origin of that is that we used to take out large mortgages to have farmland. Right. And large tracts of land. Usually that mortgage was more than anyone would ever pay off in their lifetime. And so they would buy life insurance so that when they passed away, their family could pay to finally buy the farm. And that was sort of the origin of that saying, "he bought the farm," meant that he passed away. And then the life insurance allowed the family to have that legacy and retain and keep and finally own the farmland. Just an example of, I guess, what insurance is really about, right? Protecting against a worst case scenario is what most kinds of insurance is about. Health insurance, auto insurance, homeowners insurance, but life insurance is a little bit different. That is an eventuality that we know with certainty is going to happen. And we do want, like Tom Hegna said, your quote there, how much life insurance would you want in place on the day you passed away? Enough to cover all needs and leave that positive, impactful legacy.
Oh, absolutely. And you and I know of a good buddy of ours who left this world too early after a debilitating disease, and a term life insurance policy was a game changer for his surviving spouse. And folks, when you ever deal with a situation like that, and you can look someone in the eyes and say, because you made this good decision years ago, this is what it has done for you. It has solidified your retirement. This is income tax-free money. Pay all the debts. It's just you'll fall in love with it once you have that experience.
And Chris, you mentioned the word leverage. It really is about leverage. I know that there are those listening who could confidently make the statement, "Well, I'm self-insured," or "I've got the assets to cover final expenses and leave some legacy behind," which is a fantastic statement to be able to make. But just because I've got a paid for home and assets in the bank does not mean that I would not carry homeowners insurance, right? Just because I don't have any debts and drive a paid for car with assets in the bank does not mean that I would not carry auto insurance. It is that leverage of protection that only insurance can provide that protects the assets that gives us the confidence to be able to make that statement.
Yeah, you're absolutely right. Why would you not want to insure your house even though you own it and you've got $1 million in the bank and you can rebuild it, right? Because it's cheap enough to leverage that. You'd be insane in case something happened, right? There's a 1 in 1,200 chance that your house catches on fire, according to statistics. There's a 1 in 2 chance you're going to spend some time in a nursing home for whatever time frame that is, or you're going to need long-term care protection. So why would you not leverage that expense? That's 10,000, can be up to $10,000 a month. why would you leave yourself exposed to that? I don't get it.
Again, ladies and gentlemen, talking about creating that positive, impactful legacy with Chris McIntire. If you've got questions, concerns of your own on a financial nature about your investments, your retirement plan, how to structure all of the elements of it together and make sure you are as efficient as possible, pick up the phone, give a call, 800-868-1194, 800-868-1194. All right, Chris, so there is a lot of debate in the financial world, and it seems to be over the different forms and types and reasons and purpose and timing for the different forms of life insurance. Can you break down a few that we may know and when they may be most effective or necessary for our financial well-being?
Yeah, let's start with the basic term insurance policy, which means you're buying it for typically a 10-year is the shortest term, 20-year, 30-year term. Its basic need is we got a couple that just got married, for example, and they have debts of house and kids and all of that, and they need as much as they can get for as cheap as they can get it. And they could get a term policy for, say, 20 years, for example. And then a lot of times, those policies in the first 10 years can be converted into a whole life policy without going through underwriting. So term and convertible term are very, very common as our first type, Peter.
And then, Chris, that may be because it's the kind of cheapest bang for your buck, and with the core of it, if you did not convert it, only for a set period of time, maybe one of the best tools for young and growing families, those that are just starting out in their financial progress, that need to elevate the most death benefit coverage for the cheapest budget line item cost possible, right?
Absolutely. I've got a 20-year term policy for more than $1 million that expires in 2026. I needed it way back when. I don't need all of that coverage now, but I have another $600,000 term policy, and I also have two other whole life policies. And I don't have any children, but I want to make sure my wife is protected. I get the long-term care aspects of the more permanent type insurance, so like whole life and universal life, or index universal life is what we use. We're not big into the variable life insurance side of things in our practice, Peter. We kind of typically go the safer route with our retiree market that we deal with. But a whole life policy, my wife has one of those that as long as we make the premium payments and don't miss any of them, okay, then the premiums don't increase. We don't have to worry about having enough cash value in the policy, right? It has a promise to pay as long as we make those payments. And I think hers is out to 105 or 110, however we set it up. Okay. That's a whole life policy. Okay.
And Chris, that may be appropriate really at any stage to have that in place. But as the need for maybe term drops off because we have accumulated some assets, because we have paid off the mortgage, we don't have any debts, the kids are raised and up and out of the house, and maybe we are on the cusp of retiring, so there's not an income that we are looking to replace. There may be the thought process that we no longer have the need for as much life insurance. But to your point, the desire is going to be there to continue to live comfortably throughout retirement, continue to protect those that we love, our spouses, and therefore money may be spent throughout retirement, right? The lump sum that gives us the confidence to retire on day one of retirement may be withdrawn and spent from over the course of retirement. I know for me, I want to give my wife a mechanism to refill the bucket, replenish the supply of financial confidence, so to speak. So there is time and place and reasonable argument that there should be some kind of mechanism there that is more permanent, a whole life or an index universal life. Can you talk about how those are structured and the appropriateness of those for kind of that lasting protection?
Sure, Peter. I'll use myself as an example. I have two index universal life policies that, I like to put extra money into it and build an additional cash reserve, like I said earlier in the show, that I can borrow against income tax free, which means I take a loan on the policy if I need access to the cash. Okay. We have several clients that we have built those policies that once they retire, they can start borrowing on a monthly basis to supplement their retirement income. So a properly constructed life insurance policy for income, believe it or not, okay, can be a very useful tool. Okay? So you get somebody like me that cannot put money into an IRA. I can only convert to, or into a Roth IRA, I'm sorry. I can only convert from an IRA to a Roth IRA. So it adds another incentive for me. And, I can put more money in it if I want to, or less money in it if I want to.
And Chris, I've heard these termed as LIRPs, or life insurance retirement plan. Is that a valid strategy in certain circumstances?
Sure, yeah, and some of you may have heard bank on yourself, that kind of thing too. There's some other names that this strategy can go by. And it certainly is worth looking at for the right folks, right? For me, it's a useful tool, or me and my wife, it is a useful tool. It isn't for everybody, so you need to, do your due diligence. And, it typically, people are in that higher income areas right now, that have some extra dollars to put away, and maybe they can't put money into a Roth IRA. This opens another avenue, because look, if I pass away, I got this huge income tax-free death benefit. If I don't pass away, I've got all this extra cash that I put in that policy that I can use for my retirement income. If I go into a nursing home, I can accelerate my death benefit with a contractual guarantee I've got with the insurance company to pull money out of that for my long-term care needs, and leave all my other money as is, so to speak, would be the idea.
And Chris, there's kind of two sides to the spectrum where we can get certain kinds of financial guarantees, right? On one hand, if we've got a retirement that we're looking out toward and want to enjoy, we've got a lump sum of money, a finite amount of money in an unknown amount of time. There are types of insurance where we can structure a guaranteed, consistent, and dependable income over the course of that retirement, however long that may be, ensuring retirement income, essentially. And then on the other hand, to ensure that legacy, we can structure in place the life insurance component that we have been talking about. But providing protections and leverage for the money on either side of that equation is what the balance between those two is all about. And by assigning dollars that we are certain and guaranteed to create an income, it may be a valuable strategy to also ensure that that positive legacy is left behind.
Yeah, absolutely. You can fund an annuity that essentially funds your life insurance policy, if you will. I mean, number of different ways to build this great strategies here. And, and folks, did I mention income tax-free money? I mean, how do you beat that? Everybody listening to the show today is probably concerned about our federal deficit, thinking that income tax rates are going to have to go up substantially. So, what's the best tax rate to pay? 0. Well, there are some ways you can do that, guys, and and explore all the different opportunities here. And and if you've ever helped somebody construct a life insurance policy, or delivered a death benefit from a life insurance policy, you would look at it completely different if you're the average consumer saying, I don't need any life insurance. Well, ask your spouse how much life insurance you should have on yourself.
and not just income tax, Chris, but the tax planning and being tax efficient is a big part of the total financial picture. You talk about it a lot. Self-proclaimed tax geek. We've talked many times over the benefits, the strategies to utilize Roth IRAs and doing Roth contributions and Roth conversions and planning there. But another element that people, I think, worry about and talk about a lot is estate taxes. Now, right now, there's maybe not a large percentage of the population that would encounter estate taxes because the federal estate tax limit is so high, but they have certainly talked about changing that and bringing that down. So if we do have maybe the 2, 3, $4 million net worth or more, we may want to look at effective planning now while those levels are high. Plus, if we've got those kind of assets today, over the course of the next 10, 15, 30 years or so throughout retirement, there's a good chance that those assets continue to grow. So again, planning ahead for effective tax management, income tax, estate tax, or otherwise, is an essential component of good financial and legacy planning.
Yeah, without question, Peter, you summed that up real nice. And, I'll give you an example. So somebody's sitting out listening today with a large IRA, and I think I mentioned $2 million before. And, I know that's a big number, but just think of it. So, at 1%, that's $20,000 a year. So if that individual said, well, heck, I'm just going to start doing Roth conversions, I'm going to take $20,000 out of my $2 million IRA, which is only 1%. Okay. I'm going to pay income taxes on that and put it into my Roth IRA. So maybe you got 15. Okay. Now, if you took $20,000 out and put it into a life insurance policy, even if it was 15 and you paid the taxes on it, how much do you think that death benefit is versus the balance in that Roth IRA? I mean, the number's huge. You're buying dollars in the future. Let the insurance company worry about how long it is before they have to pay it. And instead of you having to say, okay, well, I had 20,000, now I got 15. When is that going to be 300,000?
Yep. And Chris, I've actually seen a number of recent articles citing the fact that the 401k millionaire, we've got more of them right now than ever before. Just a quick check here. According to a few articles, 24 million 401k millionaires or more in the United States right now. So that's a lot of people that need to do some proactive wealth planning as well as tax planning, as you've talked about here. And this is about effective management for our lifetimes and beyond, how to make the best use and most efficient, effective use of those dollars that we've worked so hard to save and accumulate, Chris.
Yes, absolutely. And, having a good relationship with a tax planner, somebody who knows the life insurance aspect where we can, you look at all the different options that are out there. We have a lot of clients now that say, hey, should I buy a life insurance policy for my kids? They're just now getting married. So, we help facilitate that and for grandkids and all of that. And, some of them say, I'm just going to buy them a term policy for 10 years. I'm like, well, why don't you buy a 20-year policy and make it a convertible? At some point they may want to take ownership of it and then, just build in flexibility. So sometimes we know the nuances that not the average consumer does. So,
yep.
That's also very helpful and we add our value that way, Peter.
Well, again, maybe not everyone's goal to leave somebody rich and wealthy or leave a great deal of assets behind. But the bottom line truth of the matter, ladies and gentlemen, if you plan for your own lasting comfort and confidence, more than likely there will be assets left behind. So why not plan efficiently, effectively, utilizing those tools that are specifically advantaged? And there are certain assets that are better to be left behind than others. As well, Chris, is having those legal documents in place. As we talk about legacy, we cannot ignore the bottom line that you need to coordinate your financial, your legal, and your tax planning. And I know that you spend a lot of time helping people coordinate and leverage those different elements of the plan there at McIntire Retirement Services.
Yes, absolutely. And we're independent. We represent many of the different independent insurance agencies out there or insurance companies. I don't think we're allowed to say them particular by name right here, but
basically all of them that are out there, essentially.
Yeah, yep. Even one that they named a big building after in Chicago and some other places where they play some baseball games. Yep, like the Cincinnati Reds and so on. Yep.
Yeah. Well, we covered a lot of information, short program, but always this is an important topic. It is Life Insurance Awareness Month, so thought it would be apropos to talk about legacy planning. Life insurance is simply a tool to do effective legacy planning, but you need to have that plan in place. The plan, ladies and gentlemen, perhaps your best investment. And at McIntire Retirement Services, they help get your plan and your financial life in order to make the most progress possible and provide the most protection possible. They help savers and investors better determine their outcome by having that plan in place. So give Chris McIntire and McIntire Retirement Services a call, 800-868-1194. That is 800-868-1194, 800-868-1194. Chris, glad to have you along on the program. Always a pleasure.
Hey, my pleasure, everybody. Hope you enjoyed the show. Be safe out there. Thank you.
Tune into Chris McIntire's full radio program and visit McIntireRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.